In today's video, I'm going to teach you how to use TIKR Terminal Custom Metrics. We'll walk through building a clean, guided valuation inside TIKR so you can turn a few well-chosen assumptions into a clear price target and expected return. The goal is to keep things simple, transparent, and repeatable. First, open the Valuation Model Builder. In TIKR's left navigation, head to Valuation Models and click New Model. This starts you with a fresh canvas designed for forecasts. It keeps your inputs organized and the outputs easy to interpret, so you can focus on your logic rather than wrestling with spreadsheets. Next, choose the guided model and select the company you're valuing. The guided model is ideal because it prompts you for only the essentials and handles the calculations behind the scenes. Pick your ticker, confirm the dataset, and make sure you're looking at the correct share class if the company has more than one. This ensures your analysis lines up with the right financials. Now enter 3 key assumptions. These are your custom metrics. Start with revenue growth, which is the expected annual growth rate over your forecast period. If you're unsure, use the analyst's consensus as a baseline and then adjust based on what you know about the company's product pipeline, competitive position, or cyclicality. Next, set the operating margin, the average profitability you expect across the forecast. A good starting point is the company's historical margin range, adjusted for any structural improvements or headwinds you anticipate. Finally, choose the exit PE multiple. This is the price-to-earnings ratio you think the stock will trade at the end of your holding period. Anchor it to history and peers. If the business is accelerating with strong visibility, a higher multiple may be reasonable. If growth is normalizing or risk is elevated, lean conservative. Keep each assumption realistic and internally consistent. For example, very high growth with very low margins is uncommon over long periods. Review the output. The tool instantly generates a price target, forecasted returns, and a concise summary of your assumptions. Read them together. The price target reflects your exit, multiple, and the earnings you've implicitly forecast. The forecasted return shows how that target translates into performance over time. If something looks off, iterate by nudging your inputs toward more grounded ranges rather than making drastic jumps. When you're satisfied, save or share the model. Naming and saving lets you track versions as your thesis evolves, and sharing makes it easy to compare scenarios with teammates or revisit your work as new data comes in. That's it, fast, structured, and built around your custom metrics.